Hello and welcome to This Week in Property. I am your host Richard Swan, and in today's show we are bringing back the theme of the Property Pros Spotlight. Yes, that fantastic show where we have people in who are actually professionals in the business. They're involved in property, it's the investment side, construction, whatever it may be, and picking their brains, seeing how they're getting on, seeing how business is, seeing what services or areas in the world of property that they are involved in and how they're helping other people. And of course, tapping into their own particular experiences, opinions, things that they look back on, and maybe they even evaluate it in a different way. And if you're looking for a professional, well, if you've got someone whose whole kind of property group, empire, investment companies, whatever you want to say, if they've handled more than £1 billion worth of property transactions, you've got yourself a professional there. And that is, I'm glad to say, Mr. Dale Anderson from Fabrik Invest. Hello, Dale. How are you, sir?
Hey, Richard. Thanks for having me. I'm very, very well. And you? Thank you.
Yeah.
Good. And
great to have you in the show.
Thanks for the introduction.
We've just been talking before this year. You're having loads of great things to deal with storms and all sorts of stuff.
Internet problems, but yeah, it's all the storms past, and yeah, it's fine now, and the internet's working, so all good. The day is improving.
Everyone, keep their fingers crossed that we can keep them online.
Thanks. Cheers. That's all good.
As if business wasn't hard enough, as if a pandemic wasn't enough, there he throws in a storm as well, just to test himself. I love it. I love it. So, Dale, I kind of laid the groundwork there. We're going to chat about you, chat about companies, chat about businesses, focuses you're on just now. I'll obviously just touch base with how you're feeling about things in general, in the market, and so on and so forth. But who is Dale? Who is Dale Anderson? How did he get to this particular point that we're then going to talk about? How would you kind of summarise, your career if you look back on things? Any twists and turns that have brought you to this point in time?
Yeah, sure, Richard. So I started out in property about 15 years ago, early 20s. Was kind of just finding my feet in the UK, figuring out what I was going to do, and just come out of a job in a sort of event management role. Wasn't very good at it. Was feeling a bit glum one day, walking down the road, figuring out how I was going to pay my rent and, become successful. And I saw a couple of estate agents showing people some properties. I thought they weren't doing a very good job at it. So I took on a job at a local estate agent. That was my first step in the door into property in Wimbledon, actually.
Okay.
So yeah, I was selling houses back in the day when houses were still relatively affordable in that part of the world. And from there, it wasn't really in terms of investment. I went into more of a niche sector of new build and off-plan property. I helped a company based in the centre of London. I was working as a sort of property consultant for a good several years. I then managed to make my way up into management as a project manager, overseeing launches of sites, training staff. So then that kind of took me to the next step, which was to set up my own company. So throughout the last, I'd say 10 years, we were helping various new build developers raise funds for projects in the likes of Manchester, City Centre, Liverpool, areas where people could get more for their money and a better return on investment in terms of yield.
Sure.
And we were very good at it. We were, one of the first companies that started doing more paid advertising, online marketing, and just sort of using technology to our advantage. So rather than sending out mail outs in the post, we would start to do email campaigns and strategies such as seminars, which are now a bit more webinars this day and age. But through that, I managed to secure some exclusivity on projects, and from there started Fabrik Invest with my business partner Steve Jacob. And yeah, we've done fairly well through the pandemic. I think we've sold over 130 properties, so things are going relatively well.
Nice,
and the property market's got its ups and downs. I've been through a recession and come out of it quite well, and did really well and invested in properties myself. And from there, just decided I wanted to start my own business because I did realize there's a gap in the market for companies which were providing more sustainable buy-to-let property investments and more educated approach to more really educate investors to understand how property investment works
Right.
before we try and sell them the product. So a very
Yeah.
sort of more educated approach. But yeah, that just sums up what I've been up to the
Yeah.
last 10, 15 years,
That's fantastic. Yeah.
effectively. Yeah.
There's so many things that we can pull on, little threads are left hanging there, which is fantastic. I love how
Yeah.
the whole start of it is almost by accident. You're just looking to pay the rent. You're just looking to
Yeah.
where am I going next? And the next thing it's an
Mm.
advert, and then the next thing, and then the next thing. And you're obviously following that journey of
Yeah.
this door's opened. I'm going to try this. And then
Yeah.
another door opens and so on and so forth. Very organic. It's
Correct.
not well, my dad was involved in construction for 50 years. And so that's how I became. It's
Yeah.
an organic one for you. Tremendous.
That's it. I was really just trying to find, I've always been quite driven and hardworking, but what I was trying to understand is, okay, where can I make, where can we make money, but where can I also help people make money, more importantly. So for me, the UK property market made perfect sense. I've dealt with overseas markets, sold properties in Spain, Portugal, all types of locations, Bulgaria, Cape Verde Islands. So I've dealt with international markets.
Yeah.
But yeah, the UK market for me has always been a very interesting market and one that's been very popular.
And what have you seen as the key differences? Having that international look on different countries, different markets. Is it the law part of the puzzle? Is it just the supply and demand of an island? Is it what is it you find most fitting for you?
At the moment, obviously for overseas buyers, that was more kind of a holiday home / get away from the weather in the UK. So I identified there with the UK market, there was a huge demand for properties in Spain and overseas to try and skip some of the winter months, and also just to have a holiday home that they could get a bit of a rent on. From there, when the recession hit in 2008, 2009, we had to adapt and change strategy, because all of a sudden people didn't have that extra disposable income. Interest rates and saving rates were low. People were losing their jobs. So we then started to deal with different types of asset classes, from hotels to student accommodation to residential, but more so focused on the UK, because even though there was a recession, there was still students who needed property to rent. There were still young professionals and a population growing at an exponential rate that needed property. So the UK became a lot more of a safe haven for investors at that point.
Gotcha. And I love the fact you picked upon the educational part, the assisting investors part. It's not, listen, I'm not just going to be a property sourcer. I'm not just going to find random properties and just, throw them at someone for some, percentage return. I'm actually going to work with these people. I'm going to help them understand what they're looking for, why they should be looking for it. Was that always there? Was it a thing you kind of built up the more you got involved with it?
So in terms of the process, what we found worked really well was doing an extensive market research for investors. And instead of saying, well, here's a lovely building and it looks great, we were more so providing them with reports. So we do a lot of market research with the likes of Savills, Knight Frank, JLL. And I would constantly, day in, day out, digest all the market research. We then put together investment guides. So if someone's looking in Liverpool, we'd do like a Liverpool location guide. If someone's looking at Manchester, we'd do a guide based on Manchester. And we'd look at macroeconomics. We would look at where the population is going, the economy. We would look at things such as occupancy rates, obviously, within the city centre, and also try and identify where the likes of Savills would be projecting prices would go up in areas like the northwest. So, for example, Manchester, some investors have seen some really good growth there. And we were talking about Manchester sort of 7-8 years ago when it wasn't really properly on the map yet.
Exactly. I mean, you're someone who's been featured in the Daily Telegraph, Financial Times, and that northern powerhouse, it's a phrase that's always come up with you. It's something you've always seen, isn't it?
Exactly. So it's been used very commonly the last 5, 6, 7 years. The Northern Powers Initiative has been obviously an economic driver to employment, jobs, but also companies like the likes of Goldman Sachs and HSBC and some of these bigger blue chip companies actually moving headquarters and offices to Birmingham, Manchester, and Liverpool. More so now than ever that we're working remotely, and people are setting up online companies and things like that, where they realize, okay, well, don't really have to be in Canary Wharf anymore to run our operations. So we can rent for a lot cheaper. And then on top of that, you've got the HS2, the high-speed rail, and various government initiatives. You've got Liverpool Water Visions on the multi-billion-pound regeneration of Liverpool waterfront. Yeah. You've got Media City in Salford, which has been a complete regeneration, and the new BBC headquarters. So it's been a great initiative, and it certainly had the backing of the government. It certainly helped the Northwest put it on the map, really, as a place where people can do business, and people can eventually commute to a lot quicker as well.
It's amazing though the work and effort you went to for your investors. You're touching upon demographic reports, population growth, finance, economy, the full thing. I mean, not only are you giving value there, but that must increase the level of trust that the investors then have in you. This is someone who's got my back. This is someone who's
100%.
looking long term for me. They're not just taking a finder's fee and then I'll never see them again. They're actually working with me.
Correct. So our strategy is very simple. We give them the research, we give them the content, and then we make sure that we've got suitable products within those areas throughout the UK, which are classed as property hotspots. So for us, I think it's about adding value before we sort of taking from the client and saying, well, you should buy this product for X, Y, and Z reason. No, actually go away, read the guide, do your homework, because maybe you shouldn't be looking at Liverpool with your strategy. Everybody's got a different requirement. Some people are investing for retirement. Others are investing to speculate over construction and sell at completion. So it just really depends on what your strategy is, and then we can guide you in the right direction before we try and sort of sell you that apartment or that condo or that nice, lovely house because it's got a great big kitchen and a hot tub. I mean, that doesn't necessarily mean it's going to make you the best return on investment. So I guess it's getting people in that mindset of you buying it for yourself to live in, or you buying it to make you money. And that's another thing that we tend to educate clients on.
That's fantastic. And that tailored service, listen, let me understand your spec, your requirements, and we'll see how we can work with you. Does that also continue into the service that you then actually give? What I mean by that is, are you using it up to a point where you find the properties and give them to them? Or is there some of the clients that you're working with where you're actually managing the properties, or you're keeping on top of their portfolios? Where do you kind of cut it off or not cut it off?
Correct. So a quote we use throughout our marketing is lifetime after sales support. So what that means is, okay, you've bought the property with us, we got you involved. What we will offer you throughout that is customer care. So if you've got any problems, call us. We do work with the best local letting management companies in those cities, whether it's Preston or Liverpool or Manchester. So we can either recommend you to a good managing agent. Some properties we will manage ourselves. And then in terms of the service, it's not just take a deposit and pass you over to the developer. We do literally help each step of the way with giving the right guidance, and that will only generate more trust in us as a business, because we're not just sort of there to make a sale. We've got a clear after sales strategy in place, which puts the customer first, and we just make sure like they get that courtesy call every month or so, just to make sure that things are going okay. If there are any problems with the letting agents or the developers, give us a call, and then we'll be able to do our best to help. So it's an end-to-end service: management, mortgages. We work with some of the best mortgage brokers in the industry, solicitors as well. We recommend fully independent lawyers, and just make sure they've all got the right accreditations and they're all doing what's best for the customer at the end of the day.
Yeah, that's fantastic. And the webinars that you mentioned, are those specifically for your investors, or are you looking outside at other professionals? Is it across the board that you're inviting into those?
To be honest with you, the webinars are very much there for whoever wishes to attend. So it's a free for all, but it's really targeting the market from customers, clients who are looking to get on the property market, but maybe they just need a bit more education.
Right.
So in our last series, we talked about the UK market overall. We talked about buying, whether you should buy through a limited company or personal name, what the advantages are from a tax perspective. We will get a qualified tax advisor or accountant on the webinars, right through to the specific projects in those areas. So we'll try and break it down very simply. Firstly, in terms of UK locations, where's the best areas to invest, but then also the mechanics around investing, like leverage, borrowing rates, equity release, rent-to-rent strategies, or buy-to-let strategies. So there's various subjects we'll cover, and we normally hold those once or twice a month. They're open to anybody to attend.
That's fantastic, fantastic. Now, one of the areas you mentioned there where you kind of specialise in and give support in and so on and so forth, Offplan. And Offplan for a period, it used to be a dirty word. It used to have a negative connotation to it. And it really came about not because of what it is, but because some people just weren't doing it right. Other people, the numbers just didn't stack and people were getting burned from it. Have you seen that changing? Are people much more receptive to it?
Yeah, I think it's always been, there's always going to be the question about Offplan and the risks associated with it.
Yeah.
I know there are more regulations in now, especially with the solicitors, ensuring that there's deposit protections in place. Typically, you'd only put 20 or 30% down. You'd want some sort of security on that money. So there's just little things to look out for. If the developers are asking for 60, 70% cash, it means they may not have funding in place, or it becomes a bit more risky if it's unsecured. Look at the developer's track record, of course, and make sure you're comfortable with buying Offplan. If you're not, quite frankly, there's other options. We do some properties which are completed new builds as well.
Right.
But what a lot of investors like on the Offplan side is they do get the discounts in some cases. They get to choose the best apartments. So provided it's a trusted company, trusted brand, and they've got the funding sorted and all the legal security in place, you can make better gains buying Offplan. But with that comes obviously the natural risk of having to wait, or developers running into financial trouble. So for us, part of our job is vetting them and making sure there is a very extensive due diligence process in place. In fact, we've probably got the longest due diligence checklist in the industry. So some developers just won't work with us, but that's fine. As long as if we can tick off all the due diligence, then great, then we're happy. But unless we can do that, we're not gonna put any of our clients at risk, and that's why we've got to date, majority of our Trustpilot reviews and things like that, you'll see that most of them are very, very positive.
That's fantastic, fantastic. Now, you mentioned the word regulations, and my goodness, you must have seen so many changes over your time. I mean, just the word compliance these days will just stop people trying to get into business these days, to be honest. And obviously, in one way, it's really, really good, because the bad guys, the cowboys, they're being weeded out, pushed aside. So that's great. But in another way, for the good guys like yourself, who've never done anything bad and they're just looking to help people, it can become an obstacle. I'm trying to help these investors, right? Well, we need anti-money laundering, we need data protection, we need, oh my goodness, we need we need this, that, and the other. How have you found that over the time? Is it something you've just dealt with? Is it a big bugbear? What's your views?
Yeah, so with in the news, there were some schemes which either weren't delivered, or when we talk about developers, there's hundreds of developers, and for the best part, most of them are decent and they complete. But people love bad news. So as soon as there's one or two that have run into trouble, front page of news, but what we've seen now from that is the solicitors have tightened restrictions. But it's not to say they're tightening the restrictions on buying Offplan. What they're doing now is making investors are fully aware of what the potential risks or downfalls would be with that particular developer. Are your funds secured? Is there an HBC or build warranty in place? Just things like that they, they're taking a bit more duty of care on now. So it's been good change. It has been a challenge for some developers who've had to completely change their business model overnight, from maybe a cash-based model to a funded-based model. Or it may have caused a slowdown in sales at some point, because we're delivering, but Joe next door isn't delivering. So it kind of it does create a bit of a challenge for like you say, the developers who are delivering, because people are now all of a sudden, especially from overseas, Asia, for example, or Middle East, now they may be a little bit more skeptical if they do see things not going according to plan. So it definitely needs more regulation. Right. But there are certainly the government and the councils have recently taken a lot of initiative to tighten up on developer regulations as well.
Good stuff. And the developers, you're obviously working with them very closely and continually, and different developers, different sizes and so on. If you just say the word, developer or property development, all the negative slant against that is, oh my goodness, Brexit and everything else. It's cost of materials, the COVID, cost of labour, all this kind of stuff. What are you seeing, in the trenches? How are the guys, the developers, getting on with things?
So developers, that's actually a great subject, because there has been, with Brexit and COVID, there's what's happened is supply of materials have in some case been delayed, or there's been a lack of supply of materials. Now, naturally, what's going to happen there is inflation on costs. So some developers pre-order and they've already got their prices fixed. Some of the new developers are now having to readjust prices and costs. So it's certainly had an effect on the market. But what it's tough to say at the moment whether it's short term, because we've had quantitative easing in the past, we've had inflation in the past, material inflation's gone up and then gone back down in the past. So once things settle, and now that people are starting to travel again, and supplies should start to normalize a bit, which should hopefully settle the market. But there's always going to be something, from my experience, at any given time for people to have a reason not to invest in property, and then 5 years later kicking themselves that they didn't.
Exactly.
You just got to be cautious and make sure you're getting the right deal. And developers certainly, whilst the recent inflation on build costs is certainly a bit of a worry. They've been doing this for many years. Some of them have been doing this 15, 20, 30 years. They've seen these cycles before, and they've gone through these cycles before. So it's all about how it's managed and making sure that they mitigate those risks with the right people in place doing the cost monitoring and the project monitoring.
Exactly.
And that's it really. And we'll see how things go. But it certainly will have a knock-on effect on new build on prices in the short term, I would think.
Yeah, definitely. What about the land itself? Are you seeing big changes there? Just on that, a lot of companies looking to land lock, a lot of different development companies just holding off, sitting on it. Are you seeing changes there? Or is there a boom at the moment that they're actually trying to use the land? Or are people at the moment trying to snap up as much as possible and then just keep it until they themselves think that there's going to be a bit more certainty?
It's a bit of both. I think there's always going to be people with a sort of Warren Buffett mindset of, in every crisis there's an opportunity, and they'll be looking for good deals at the moment and creating some great deals on some land, commercial office buildings that are no longer in use, or on auction, or people haven't been able to pay the mortgages on them because of what's happened, or whatever the reason. That's been a big one, because with build costs having gone up, now what makes more sense for a developer and for an investor, right? If we can get a commercial to residential conversion, that's going to keep the cost down, because the main structure is already there.
Exactly.
If that makes sense, in terms of the steels and the metals and the concrete and everything else. So that's been a big one. There's definitely been a big shift from land banking to buying up unused industrial or office space, from what I've seen. But there are still definitely deals being done on land, again, because borrowing rates are low at the moment. So a lot of people are capitalizing on that. So it's a bit of both. Some people, skeptic, won't be investing right now, and others are thinking, well, hang on, there's a good chance for me to capitalize on the current situation.
That's it. Now's the time. And as you said, cycles, phases, booms and busts, everything, it's always going to be there. We never know exactly how much, but we know it's going to continue that way.
Exactly. So I can't tell you now for sure what's going to happen in the next year or two. What I can say, based on the data today, there's less supply in the market. People are moving. People are buying property for reasons of wanting to change up or start a new chapter in their lives or whatever it might be. More space, maybe a garden. So so there's a lot of activity, and there's a less supply in the market, which creates a bit of a constraint on supply, and ultimately that's pushing prices up. UK prices on average have gone up 4%. Up in the northwest, they've gone up 7 or 8%. The Bank of England was saying prices were going to drop by 15%.
Right.
So they've got that wrong. And so that's the thing. So whether that's going to change in the next year or two, it is very difficult to tell, because there's a lot of factors to consider, and things change all the time. What I'd say with property is, if you're buying medium to long term to hold, you shouldn't be too concerned, because things may go up, they may go down a bit, but unlike cryptocurrency or stocks or shares, at least you own the asset and the bricks and mortar or the land or whatever you've bought, you own it.
Exactly. That's why we love it. That's why we're in this business. All those sharp peaks and troughs, they can be smoothed out over time. That's why we get involved. Fantastic. Now, tell me this. Loads of experience, loads of areas you've worked in, loads of location, loads of these cycles and phases and stuff. Looking back, when Dale takes time off and maybe a storm wipes out his internet for a while, he's got a chance to review on things. What do you see as the biggest challenging time that you had and you got through, and what's been some of the biggest satisfactions for you? The ups and the downs, the goods and the bads.
One of the biggest challenges probably in the recession, the global crisis, where we had to basically get rid of 70% of our staff at the time. Fortunately, I was always one of those people that was able to bring in enough sales and revenue not to lose my job. But so that was tough, because as a manager, you've got to make some tough decisions when the going gets tough. And that part of the job for me, I like to see people happy, enjoying their jobs, making money, same as the investors. When things do go wrong, that's the part you don't enjoy. So I'd say that's been a challenge. Obviously, the recent pandemic's been a challenge with regards to travel, working remotely, but you've just got to adapt. So by adapting, getting our sales guys more comfortable using Zoom, doing virtual viewings, it's all about adaptability and being flexible with your staff. And I think but for me, the biggest challenges, probably that's been two of the biggest challenges, was the recession and then how to manage your business during COVID. Which was sort of unexpected. And then the ups are obviously when things are going well and the market's good, and people are investing, and staff are happy, and the sales people are doing well. That's the good times. So it's like with everything, you're gonna have your good days and your good months, and you're gonna have your bad days and your bad months. It's just how you move forward from that. I think that counts. So you need to be resilient. Resiliency.
Very good point. Now, I want to be respectful of your time. Can't drag you here all day long. You've looked back. Let's look forward. Where do you see Fabrik Invest themselves going? What areas are you going to stay as you are, stay in your lanes? Do you see different locations? Because obviously, as you said earlier, the whole northern area, you've seen that a long time before everybody else was talking about it. Is there any other areas, locations that are starting to excite you and you think you might shift there?
Yeah, so already we've moved into cities such as Preston.
Right.
We feel that there's a great opportunity there. There's a huge amount of regeneration taking place. Property prices are still more affordable. So cities like Preston, even commuter belt areas around Birmingham and London. So where Birmingham city centre is quite expensive, yields have dropped quite a bit. You can pick up some better deals in some of the commuter areas around there. So these are areas we will look at. When we even sold a scheme out in Dudley recently, so we're constantly looking around Rotherham, Yorkshire. There's some good spots around there. I know the northwest. So a lot of people are still very much focused on the Manchester and the Liverpool and all of that. But I think a lot of smarter investors or professional investors have started to look at some of the more tertiary locations around those cities as a possible good bet. for better yields and better returns. So yeah, we're always looking forward to the future. And while we focus on off-plan and new build, that's our area of expertise. We do have other functions within our group who do land sourcing. We do site sourcing as well, so we might get offered sites that we could do joint ventures on with other developers. So yeah, there's more to it than sort of just that side of the business. You know, we are going to be expanding into possible secondary market as well. But for now, yeah, new build and off-plan sort of where most of the demand is for us.
Fantastic. Exciting times are lying ahead, so they are. So listeners, viewers, whenever it's safe to do so, make sure you stop and go into the show notes, because you'll see all of the links to this fantastic man that's helped you today with his tips and tricks and wisdoms, which has been fantastic. If you're an investor and you want to work with it, this guy sounds great, this company sounds fantastic, you want a hold of those many reports to keep your investment right, reach out, get in touch, see if they've got space to work with you. Or if you're one of the developers who thinks they're up for it, they're up for the challenge of facing the longest due diligence list in history, then again, reach out and get in touch, because he's obviously the man that can help you, that's for sure. Dale, for your time today on This Week in Property, thanks a million. It's been fantastic.
Thanks, Richard, for your time. I appreciate it. Take care. All the best. Cheers. Bye-bye.
Well, I hope you enjoyed today's show as much as I did. Remember, with the guests that you just saw, go into the show notes for the page, because all of their links are there so that you can get in touch and to get more information. And talking about getting more information, more guests, more insights, more knowledge, etc., make sure you're subscribed. Get the subscription done, get the notifications on, and then we'll always keep in touch with you every single time a brand new show is going to come out. So thanks for tuning to This Week in Property.